Hello and welcome everyone to the Commodity Report for the 10th of May 2023, presented by myself, Phil Carr, at the Gold and Silver Club. So right now we've got gold prices, they're trading at $2,030 per ounce. But we have oil prices, they've had a slingshot move in the last week here, breaking out 1,000 points from low to high. Impulse move over Thursday, Friday, and into Monday's public holiday as well. And with that, we've of course taken the opportunity after scaling into multiple positions to start banking profits. In fact, we banked on Monday 800 points profit on crude oil, but we built into many trades here which are moving really nicely as we continue to move into the middle of the week. In fact, we've even taken the opportunity on the dips at the start of the week to even accumulate more energy positions. Really everything that we talked you through on last week's report. Huge buy opportunity for a move back down towards the swing lows for WTI crude oil when it broke back down towards $63 per barrel, retesting the 20th of March lows. This is where, of course, oil prices, they went on to break out over 2,000 points in the following 3 weeks. With that, we've already seen now 1,000 point move from low to high just from last Wednesday's FOMC statement through to the public holiday that we had on Monday. As we discussed with you, we were expecting explosive move higher on commodities at the start of the week. Copper, we identified with you a big opportunity on that market. We had over 100 point breakout to the upside from Friday through to Monday, with the LBMA closed on Monday, no London fix for the metals. This is, of course, where we saw that breakout move higher on platinum, on palladium, on copper, on gold and silver. If you look at all of those markets, you've had a significant increase in price since the beginning of this week that we outlined with you to expect this with the public holiday, with the LBMA closed, no London fix in the morning or the afternoon for the precious metals. Often this can create catalysts for a breakout to the upside during thinner liquidity in the market. We've seen exactly that. Not only this, we've also seen the dollar index start to build up some momentum as well, alongside natural gas. We've seen multiple markets over the course of this week so far starting to accelerate higher. Natural gas prices are up 4% this week. We've also capitalized on US dollar index long positions in the portfolio, which have all moved nicely into profit, alongside a windfall amount of profit that we've got at the moment on crude oil. And of course, we also banked 500 points on platinum last week. So there's been back-to-back opportunities for you to capitalize in the last week. If you're not making money in commodities right now, you absolutely should be. We're getting huge volatile moves week to week, 1,000 point ranges easily on many of the commodities that we're talking you through and trading, including WTI crude oil and Brent crude oil, which of course have had accelerated moves over the course of the last 4 days. Now with that, what can we expect moving forward? So on Wednesday, all eyes are now going to be on the CPI inflation data. This is really the next major catalyst for the markets to keep an eye on. Historically, over the last year, CPI data tends to see metals and energies, they'll break out into the actual CPI data and then they'll sell off in the days afterwards. So often what can happen is you spike higher into the CPI data, which personally we're going to use as opportunities to scale out of more profit if we do get another volatile move to the upside. And then ultimately I would expect to see some profit taking later on this week, which is often the case after the CPI data. That's typically the way you want to play it with this major news item on Wednesday. Everything that we talked you through last week to expect that all played out. So of course, the European Central Bank and Friday's non-farm payroll, often you're going to see downward pressure on many of the metals. We definitely saw that with gold. We saw from high to low an 800 point breakdown in price. We capitalized on that as well with the sell short on many of the metals. We definitely saw that with gold. We saw from high to low an 800 point breakdown in price. We capitalized on that as well with the sell short on platinum. We went long the dollar, which has moved into really nice profitability, and we built into a number of energy positions. All of those are currently in profit on WTI crude oil. So with this, again, it comes down to utilizing data, statistics, market intelligence. It's 2023, the age of data. Definitely ditch those outdated technical analysis strategies and technical indicators that will give you absolutely no edge at all in the current market conditions. You want to be learning and understanding the daily, weekly, monthly, quarterly, real-time data-driven cycles for each commodity. Definitely you want to be learning and understanding the capital flows in the market. Alongside that, the major news events, how they affect each commodity. Anticipate the move that you'll get into the release of that data, how the market often reacts once that data is released, and the move that you get after the data as well. This is going to help you massively in order to be able to sniper in and also sniper out of your positions, getting that windfall amount of profit, and then rinse and repeat the whole process. Further align that as well with the intermarket correlations, the ratios in the market. This will help you to know which commodity you want to have in your portfolio at any given time, how to balance the portfolio. This will help you to know which commodities are likely to outperform over any given week, over any given month, and over any given quarter. And then, of course, further compound that with the macroeconomics, the fundamentals, the geopolitics, what the central banks are doing week to week, and of course, how the central banks are positioned. This week, we have the Bank of England later on this week, which is scheduled again to increase their interest rates. So that's going to be another volatile move later on in the week on Thursday, the day after the CPI data inflation release is going to be due out as well. And then, of course, you want to further compound this with how the hedge funds, money managers, banks, institutions, how the commercials and also the bullion banks, how they're all positioned in the market. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to join our professional mentorship program.